Good evening, traders. It's Simon at Kairos Capital Markets with the yearly review of Euro Dollar. Now, I didn't do one last year of this because I only concentrated on two pairs to kind of prove a point that you don't need to trade the most liquid pair in the world to make money, and you can actually, a chart is a chart, simple as that. But as I started putting it into the review of what people were asking me to do each week, I decided I would do a prediction for 2018 and to show you what I'm looking at. So here is the quarterly chart as we start with, and the first thing that you notice is this upward sloping trend line has capped price quite nicely. Also 1.2 has also capped price quite nicely as well. It's a very, very key level. Now what I see here is I do see the dollar powering up. I do see the euro heading downwards. So for that to happen, we do need some reversal candles here. And what's happened here, just here briefly, we've had a reversal candle here, bullish engulfing candle, deceleration, and this deceleration is getting slower and slower and slower here. So I do feel for 2018, the start of it, we'll see it mess around on this chart here, and maybe just put a little bearish candle in, finishing around about 18.5, 1.18, somewhere in that kind of area. That's what I personally believe. The reason why is because Drago doesn't want 1.2 to be broken. And also it's a key psychological level there. So that's my first instinct to that. Now, if in 2018 it breaks this upward sloping trend line to the downside, it breaks it and breaks 105, so I'm going to tap in 105 for you guys as well, show what I'm about, 105 there. This level's more key on the weekly chart, but you're on the monthly chart, you'll see later on. But if it breaks these two levels here, this will fall to 85 to 90 area, this area here. I'm going to highlight that area now for you guys. This is what I feel will happen, and it will come into this zone here somewhere. The minute it breaks 105, it will come into this zone. Is it going to be hard and fast? Well, we have seen it hard and fast. We've seen it move from 1.4 down to 1.05 in 1 year. So it's not hard to. It's not impossible to turn around and say it can't happen because it has already happened in the past. It might happen again. Very true, but it's not so likely. But it definitely, if it does break 105, you'd definitely be around here somewhere in the next year. You would, in between this vast space here. So that's what I'm looking for on the long-term charts. Now, how do we get there? So here is the monthly chart. This is why I feel this more stronger. There's a nice triangle. Come down, test this level here. Come back up, test the triangle here. This whole move here is quite normal. It's a breathing market. It's just people don't like to breathe on the monthly chart. They want their money now, but it doesn't work that way. And as you can see, it's a 0.3/0.5 Fibonacci pullback it is. So the market is breathing very, very nicely there. I know the monthly 50 MA is just below price now, but let's look how time's been respected. You could say maybe once there, not very well. There it got tested, that's it. So we're looking at 2005 and nothing there, and then 1998. So in 20 years we've got two respects of the monthly 50 EMA. So I wouldn't worry about the EMA so much. It's not a crucial thing on the monthly chart. That's my first impression there. Now here, what we've got is this. We've got two little tweezers, break down, come back up. This is now the deceleration again at 1.2. So what I'd expect now, a little pop up. I'd say personally it might pop up above 1.21 at the moment a little, but that's just to shake out the people who are going long. Also to get people in long, but shake out some of the early shorts. That's what's going to happen there. So I think they have a little, over January, a bit of a shake up you all. Imagine like a guy shaking a tree and he's trying to get the bananas out of the tree, and the bananas are just the stop losses of people, just to get them out, just to get the price a little bit higher up, and then the market makers can sell what they want to sell at that level there. And what happens now is that everyone will get out, no one will like it, and the market makers will put their positions on nicely. They'll put a nice double top pattern there. Won't be clean looking on candles, but this is what's going to happen, and then it will start moving down again. So my first initial target will obviously be 1.145. Key there, and then if it breaks down there, you've got this upward sloping trend I'll be looking for. Breaks down there, I've got 106 there. If it breaks down 106, that is when the free fall is going to happen. So you've got, I'll highlight the areas here. You've got this area here is the first one. You'll have this upward sloping trend line, the second one. This is the third area, and then price will just do something like that. It'll do that. It'll do that. Something like along the lines like this, and then it will just drop out the sky like that. That's how it's going to happen. That's really how I feel it's going to happen. But you've got this area here, this upward sloping trend line, and this area here to break and retest for that to happen. Okay guys, so that's what I'm looking for there. On the weekly chart, it will look, it's a little bit messy, don't get me wrong, but here you're looking for, I'm looking now for bearish presence here in the marketplace. So zoom in here. If you see here, the market on the weekly chart has actually accelerated a little bit to the upside, which is, well, it can do whatever it wants, to be quite honest guys. Just let it just settle down a bit here. Oh, sorry, it's a daily chart, sorry. Let's go down to the weekly chart. Weekly chart same as the same triangle I've got in there, sorry, as the monthly chart. There is your bullish engulfing candle there, touching 1.2 and just stopping there dead. It has broke above it, then come back down. There's the little zone there, 1.212, sorry, is the line I got there in the sand. I do feel we break into 1.22, 1.23, then yes, you're definitely going to have a bullish market. I don't think that will happen personally. I think you'll respect it. It will put a higher high in here, but that's just to deceive people. It's not actually going to be a thing where you'd say, oh, it's long. And yes, the daily chart here, we just moved. We've had acceleration moving upwards quite fiercely at the moment. I don't think this acceleration is actually natural to the market right now. There's no institutional traders at the moment. This is just retail traders that, you know, going, oh, daily 50 MA, buy, and that's all it is. And everyone's just marking the price up. So for the moment, if you're long, I'd be rather concerned because I think you'll be shaking out this position beforehand. I could obviously well be wrong, but at the same time, just looking at volume and looking at how markets work, that's what I'm thinking. And this would be a double top pattern there. So if I just zoom out, double top pattern would be, there's your first top, your second top would be here somewhere, and this would be your double top. There we are. And that would be a pattern forming there. So you may find you get another little mini head and shoulder pattern here. If we do start getting something forming there, I'll just sell off the right shoulder person. That's what I'm looking for, and I'll happily hold this position for a long term throughout 2018, adding to it as we go down the line. So just to give you an example here, as you can see, we've got 1.17's got multiple tests there, 1.16 got another test there. So personally myself, and 1.187's got a test there. So I'll be looking for sell positions around here. Around here, these will be adding into the position as I go along. Around here, around here. I'll be then looking to take some positions off this level here at 1.14 just to bank some money, make sure it's nice and safe, so make it a safe trade. So you probably find this one here and this one here will be banked, these two are just leaving open, so these will be nice profit there. And then obviously then if we get the price does this, breaks and retests there like that, for example, I would then be looking to get in here again. So I've got 1, 2, 3 trades now running if that was the case. You've got a level at 1, here. You've got a level there, but bear in mind you've got the upward sloping trend line as well. So this would depend where the upward sloping trend line lies in the weekly chart, and they're the positions I'll be looking at as such. So as you can see, you get 1, 2, 3, 4. You've got 5 possible trades that would be happening, of which I'll be having 2 left open long terms. This is the initial one. This is the proper, the one I take full risk on. This is an add-on trade. This is an add-on trade. So you might get 1 or 2 here. You never know. 1 out of 2 would be nice. Take profit on these 2 here, or one of them there. Take profit when it touches 114. When it breaks and retests 114. Add in another trade here. And these ones here will be complement that. If it is with the break and retest of the trend line, I'll use profit from these ones to add into this position here, and then we'll be staying nicely there. So there's my outline for 2018 on the euro dollar. But like I said, right now we need to see some selling signals here. I'm not on about just a high test here. I'm on about another touch or so. If you do just get a high test and see it breaking down, you're going to need some nice bearish confirmation on the intraday to actually, for me to sell that personally. And if I did sell it, it'd be a large stop, because I know right now people are dumping this left, right and centre, and it's not really the move. So my stop would be something like this, 170 pip stop, which people think is obscene. But if you can imagine down here, that's at 1%, that's 4.8% trade already. Do the same in there, that's 13%. Do the same here, these are tighter stops here, that's like 20% already. Do the same here again, same kind of stop size. You can easily make 100% in this trade in a year, you could guys, from one pair, taking multiple trades at the right point in time. Okay guys, so going on for next year, I will be doing, I think, euro dollar most of the time as well. And obviously you've got the dollar index as well to look at. So guys, happy new year and speak to you soon.